why did the central bank cut the policy rate again? And what is the outlook for the export industry?
Hannette, the Bank of Thailand has decided to cut its policy interest rate due to economic slowdown, U.S. tariff impact to SMEs, and structural problems in Thailand. BOT's Monetary Policy Committee has cut the rate by 25 basis points to 1.5% this week, meaning that borrowers can have some relief from loan pressure and more cash flow will be infused into the market. With weak economic performance since Q2 2025, the chief economist of the Kasikorn Research Center, Burin Adunwatana, told me that the market expects more rate cuts until the end of 2025.
I think we see more cuts coming. Actually, we're quite surprised that the BOT went ahead with a cut yesterday, because we thought that because I think this current MPC had a sort of hawkish stance that the economy is holding up quite well. The export performance is looking much better than thought. So I thought they would not lower the rate like they did yesterday. But we expect that since the incoming governor, Kun Vitai, I think he's been known to be a bit more dovish, and his previous interviews that he would like to see lower rates. So we expect now, I think at least 2 rate cuts. I think there will be a rate cut at every the last 2 meetings, MPC meetings of the year, and we are focusing on where would be the terminal rate. Now we are thinking whether it would be 0.75 or 0.5% next year.
While the rate cut has lessened economic pressure, the export industry is still facing impact despite the tariff rate has been finalized at 19%. According to the latest paper released by the Research Center, a contraction of 7.4% of Thai exports volume is forecasted with a year-on-year basis, whereas the GDP growth in 2025 is projected to only 1.5%. The chief economist also told me that we will see a recession in Q4 2025 as export volume declines and uncertainties extend to politics and border tensions.
There is a high chance that we might see recession in Q4, but this is because of but this is arithmetic, because the first 2 quarters we saw a big boost from front loading of export, and this is coming down. As I said, export we expect to see negative 7.5% in the second half, and compounding with the border tension, and that is putting off a lot of tourists. It also coincided with the sharp decline in Chinese tourists into the country, and now we have a travel warning by many countries because of border conflict, even though Bangkok is quite far away from the where the area where the conflict is. Many seminars, many business meetings have been cancelled or postponed because of this. This is just adding more and more problem to weigh on our tourist income this year. Structural problem because our potential growth, just to add to that, our potential growth has been coming down quite significantly over the years. I think even 10 years ago, I think our potential growth was 3 to 4%. Now we say maybe potential growth is 2.5, but we're not even achieving that. We might get 1.5, 1.8. But next year it's going to get even lower because of these structural headwinds that we're facing. So how do we do that? How do we tackle our education problem? How do we tackle the shortage of high-skilled labor? And just to add insult to injury, now we have a lot of Cambodian workers migrating back to Cambodia. That's putting a lot of disruption in some of these manufacturing business and agriculture, restaurants and food industry.
However, the economists also emphasize the importance of data center investment and foreign direct investment that Thailand can get benefits from. So Ned, he also suggested implementing stimulus packages for farmers and relevant sector. as they will get impacted the most if Thailand really eventually open its market to the United States.